As always, wonderful and beautiful, glorious day it is. Ladies and gentlemen, this is the day the Lord has made. Let us all rejoice and be glad in it. It is a soulful Sunday. Absolutely, it is. It is May 5th, 2024. Okay, this is your weekly trade watch list. Is YT on YT, yours truly on YouTube. All right, and this is a trade, and this may be, yeah, this is the trade of the week right here that we took on gold. No, we got to take it out and break even. So trade was simply executed right here, right? And obviously price came down and hit TP1. We closed 50% partials. Stop loss was placed at break even, and obviously price did what? Came right here and took us out right here at break even. All right, before all of this um, fiasco, which was NFP, happened. Okay, so excuse me, yep, excuse me. That was the weekly trade watches, and the reason why we got into this trade, I like to combine Elliott waves mixed with the Wyckoff method. I believe they match up and go hand in hand. They make a beautiful couple. All right. So reason being, I see see this redistribution. Right. Redistribution is a price cycle in the Wyckoff method, and I see this reaccumulation. I see this reaccumulation, which is a price cycle in the Wyckoff method. All right, and so when it comes to Elliott waves, I know that this is a wave 3, 4, and 5 because it's a divergent. Excuse me, it's a divergence, so it always ends in wave 3, 4, and 5. Create waves 3, 4, and 5, creating the divergence. Now here's the deal: when it comes to Elliott waves, this wave 3, 4, and 5 may be a wave C, it may be a wave A, it may be a wave 3, or maybe a wave 5. All right, because inside of waves 1, 3, 5, A, and C, you're going to have a divergence. You're going to have a pivot and a divergence. And the thing about it is, after all these waves, you're going to always have a divergence and a pivot. All right, so what I'm talking about is this. You will see price do this. Like right here, from this low to this high to this low is a divergence. That's a wave 3, 4, and 5. Okay, so what you can do is I'm using Elliott waves as a guide and not as a um, I'm not pulling out a fib to looking for it to hit a certain fib level. Excuse me, not looking for it to hit a certain fib level in order to get in for an entry. That's not what I'm using it for. I'm using it as a GPS and as a guide because I understand um, where price pivots at and it creates another divergence. And once it prints, I can definitely determine and confirm, okay, that's this wave or that's that wave. Okay, so this being a divergence, this is definitely a wave, what, 3, 4, and 5, right? And so price popped up, and this was an area of interest where the sellers could have came into the market and pushed this thing back down. But you see that this turned out to be a bearish SMT, which is a bearish smart money trap. And so price failed, and the bulls showed their strength, right? So right here, let me show you how this is a divergence. You see how simply how price is doing what? Slanting lower right here on the candlesticks, and it's slanting what? Upward on the RSI, which makes what? This midpoint right here, the last known lower high in the last known lower high that did what? Distributed, redistributed, broke lower, and broke structure and created this lower low. So the fact that price accumulated, reaccumulated, tapped back into this demand zone. It distributed, redistributed, came back to the demand zone, accumulated, reaccumulated, broke this structure, and caused a what? Change of character on this lower high, right? So now it's like, okay, is this thing going bullish? But here's the deal. So we see this thing create a wave 3, 4, and 5. Price went up and did its thing, right? And so now we see another divergence right here, wave 3, 4, and 5 right here. And so now my thing is after wave 3, 4, and 5, normally you'll see a ABC correction, right? The market will go into a corrective phase. So I know that when it comes to the rules of Elliott waves, that this is a redistribution when it comes to the Wyckoff method. This is a redistribution price cycle. But when it comes to the Elliott waves, I know that this is a wave B because a wave B is in the form of a triangle. There are four different types of triangles when it comes to Elliott waves. Okay, but I don't need to know the type of triangle. I just need to know that it is a triangle. Okay, so this will be a wave A. This entire thing would be a wave B. And this will be a wave C. Okay, this may be an A B C A wave. Okay, and because it's A B A B C, this may be an A B C A wave, and this right here could be a what? A B C B wave. To go ahead and do what? I was looking for it to go ahead and sell down, obviously, to this. I have it marked as an M5 demand zone because we see how this is imbalanced. Okay, and this is the last area that did what? Accumulated, reaccumulated, broke this internal substructure and caused a change of character on the M1 time frame. So that's why I was simply going for that area. And you can see how price, smack TP1. We closed 50% partial, stop loss and break even, and then boom, took us out at break even. All right. So needs to say we still followed the rules, still followed our trading plan, and it allowed us to have a profitable week. A profitable week. That profitable week was in the increase of, I believe we started with $125.66, and now we are sitting at, which I'm going to simply document. I have my trading journal right here. Got the 4X, the number 4 and the alphabet X, 4xtradingjournal.com. You can simply get yours. From there, I'm about to log into my trading account and see and mark my actual ending balance, the equity. Okay, and I'm marking an asterisk by when I ended the week. I know when I began the week, but I'm marking it by when I ended the week. So we're at 131.84. All right. So what I'm putting on the outside right here is that we ended the week with 131.84. So because if you're not tracking, you slacking. That means you freestyling. If you're not tracking, that means you freestyling. Trade, you got to treat trading like your business. You wouldn't want to risk your business 5%, 10%. So you got to treat trading just as such. Got to keep account of your debits and credits and balance your books when it comes to running a business, right? Same thing. Got to keep track of your profits and everything, and your negatives, your positives, and whether your stop loss, break even, whatever the case may be when it comes to your trading account. All right. So that was the trade of the week. Okay. So now, what we simply need to do is just erase everything, and then what I like to do, erase everything, and get in the habit of marking up charts every single week. Okay, it's just like working out, it's just like putting in reps. All right. So let's see what's up. Okay. Now we see how after NFP, price came and smacked this low right here. Price went up, tapped right here, came right here. So it has not broken the, has it broken the structure? Yeah, it has. It's broken the structure and created a higher high, but guess what? That's internally, so this may be a supply zone. We can see how price smacked that supply zone already with this big push up. It came back down here, respected these demand zones, and started doing what? Climbing higher. But what we see right here on the M1 time frame, and we're unable to go to the second time frame below that, we see this unmitigation right here. Okay, we see all of this possibly being liquidity. All that being liquidity, probably want to come down here and do what? Mitigate this imbalance. So this is a possible entry or a possible exit on the next possible trade. So my entries and the exits are always the same. Your entry is your exit is equally as important as your entry. Okay, so I know when to get out. So we see this right here, how price tapped into right here, broke this structure right here, and ultimately went up above to break this structure. Right, we see how price is probably diverging right there. So this is an M1 demand zone. I'm gonna mark it off as that, and we're gonna look at all of this as liquidity. All this being trend line liquidity, inducing everybody to do what? Take buys off of this trend line. So then they can yank them and drop the market down. So I'm looking at this as liquidity. And let's see. And so you see our price diverged right here. I can look at it and see and tell the diverged and change character right here without even looking at the RSI. So you can see how price did what? Slant lower, slant upward. Boom. This is your change of character area. You'll get better at it with your eyes without having to use the indicator. But I'm showing you how to utilize the indicator because not as many people can see it without using the indicator. A lot of people can't identify divergences without using the indicator. But I'm showing you how to do it with training wheels, essentially. So then I'm looking at this as all what? Trend line liquidity. Having everybody go up, get yanked, buying off this trend line, and eventually get yanked. So 1 minute liquidity below. All right. And so see, you can almost sort of see we got equal highs right here, equal highs right here. So maybe, may not, the supply zone may not get disrespected and may start selling down. We don't know. But we do know that this right here is a point of interest right here because price diverged and changed character. Okay. You don't put a buy limit sitting on it, but what you do is zone it off and say, okay, cool, this is an area of interest that but the buyers may want to come back and push this thing back up because what? Price diverged and changed character. Every divergence and change of character is a point of interest. Okay? Every divergence and change of character is a point of interest. The area of interest where the buyers may come in if it's a bullish divergence with a bullish change of character, and if it's a bearish divergence with a what? Bearish change of character, like right here. This zone right here is an area of interest where the sellers may want to drop the market. So you always mark those out. You don't put a trade, order there, but you zone it out because this is an area of interest where the what? Sellers can come in at. This is an area of interest where the buyers can come in at. All right. So this right here is what? An area of interest where the sellers can come in at and drop this market down. Okay. Even though it has blown through with this push of these two push-ups, it could have what? Absorb liquidity and want to do what? Yank this back down. It's absolutely possible. Just because it failed it doesn't mean that it doesn't want to go down. We don't know what the market's gonna do, but we don't predict, we react. We react to what the market does. All right, so it's gonna be M1 supply zone, like so. All right, and all we have to do is just wait patiently. Just wait patiently on our setups and on our entries. That's all we can do. Um, yep, that's all we can do. That's all we can do. Let's see. Because what I can do, also you can put this could sell all the way down here because this could be setting up to be a harmonic pattern. It absolutely could be. This could sell to right here, and the buyers will come in from here. All of those are possible opportunities. What I'm doing is just I see things, I mark it up, I make my alert. Oh, it's 5:04 p.m. Central Standard Time. Gold is starting to move now. Gold just came out with that candle. All right. So I'll mark this alert and say, hey, this is a M1. Make a mental note. This is an M1 demand zone. M1 demand zone, set alert right there. The market will notify me when a candlestick comes out and hits this area. Also, I'm gonna mark and notify this area right here when price comes to hit this area because it's possible entry where the buyer should come in at. So that's what we do. All right, nothing more to it. That's all we simply do, and just let the market play out. Just let the market play out the way it wants to. All right. Uh, okay, got some possible entries on the M1 time frame. My people on IG, we live on YouTube. We live on YouTube. The YouTube link is in the bio. Now here's the deal. On gold, on the daily, we see this divergence and change of character right here. So we need to zone this off as a daily supply zone. Okay. Daily supply zones, eventually price will come back here someday. We don't know what it's gonna do when it does. When it's an imbalance in the market, we know it's gonna come back someday. We just don't know when. All right, so we gotta zone that out. Hmm. I'm tempted to see if this may be a dope sell. My sell already, just in case. And at least trade with a 0.02 so you're able to take partials. And so every divergence is a piece of market structure. It's a pivot in the market. So you can see how this can be a high because this was a divergence. You can see how this is slanting upward and this showing equal highs or slanting lower a little bit, and then midpoint right here, change the character. So bam, this will be a high. This right here will be a low, and if this decides to diverge and change character, it'll be a what? It'll be a high. So right now, good. Let's see. Believing it's probably going to push through because price had already mitigated the supply zone right here, and this created this lower high did not go below here and create a lower low. Stopped right here, and then went back up and broke above this, and then pivoted right here off this zone. And then chose to shoot up. So there's always opportunity to be able to trade these markets. You just got to be disciplined. You got to be disciplined in it. Okay, so let's go look at, since we're in the Asian section, we'll look at RCAD. Go look at RCAD. All right, let's see what's happening on this. We'll be on a 4-hour order block. We got bam, destroyed. Cool. Okay, remove that. Okay, we see our price pivoted right here, boom, kept going. So guess what? We're going to let's see. It took this liquidity out. Simply came back to this reaccumulation right here. Took this liquidity out with this move right here. Boom, they rallied up. So the market is always in search for liquidity, and then it broke the structure. So on the let's see. This should probably be getting ready to diverge in a bit because we have this right here. We have this channel right here, and it's imbalance. Okay, let's mark this up. All right. Uh, it's not getting ready to diverge like at this moment, at this instant, but it's cooking for one. See how this market is really going nowhere right now on that time frame. You have this imbalance. This imbalance is a point of interest. The buyers can come back in. Sellers can push down here, and the buyers can come back in. This level pushes back up if they want to, if that is the plan. Um, but let's see. Hmm. Let's see. What is it attempting to form? Hmm. It's a bit choppy looking. Let's see. Take this liquidity right here. Boom. Route it down. Boom. Broke that structure. So let's see. Let me erase this. It's a divergence. Change of character right here. Nothing to smack this right here. So zone this out as a supply zone because this is unmitigated and it broke a structure right here. This right here could be liquidity that was just now taken out. See all this right here? Liquidity that was taken out by this move right here. So this is the weekly. Weekly liquidity of like that. Weekly supply zone. If anybody's watching, you have any questions, problems, or concerns, I can come back. I can see your questions. What's up, Tony? What's up? What's up? What's up? I can see your questions. Appreciate the support. Um, you have any questions, problems, or concerns, I can come back to the main menu or my StreamYard account and I can see your questions. I can't see your questions when I'm looking at the screen though. I just have to dip back every now and then to look at your questions. So mm, 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 mm. Let's see. Oh, also, Tony, while we on YouTube Live, um, I seen your Facebook post. Ari smoked them. Aries, I think it's I don't know, Ari. He smoked them in the 100-meter dash. I saw that. He left them in the dust. His son left them in the dust. He absolutely zoomed by him. There was nobody within uh, 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 a horse's nostril hair close to him. So that's what's up. I'm proud of him for achieving that. So let's see. What does this structure look like on a lower time frame? Let's see. Let's see. Let's really got to follow our time frame structure. We know that this is some type of divergence, change of character. Obviously, price came back and do what? This is a fair value gap. You see how this wick right here wasn't mitigated, right? And then you see how this third wick right here. So this is what you call a fair value gap. This wick right here, this wick right here, this candle did not touch the wick right here, this first candle. So guess what? There's a liquidity void. There's a liquidity void. There's a gap. There, right there is price inefficiency. Price inefficiency, and it needs to be. It's an imbalance, and it needs to be filled. Liquidity void. So that's why price did what? It diverged right here. It changed character, and it came back to fill this void. So that would be your what? Your higher low. Okay, and price will do what? Probably go up here, break structure, and create a what? Higher high. So we have to look at that and take that into consideration. Okay. So price, let's see, you can see it better on the weekly. All right. So we go down, you see it better on the daily, excuse me. You can see how price diverged right here. Let's see. Boom, price popped up. Can't really see the divergence on the daily, but you see how this move popped up right here, created this high, came back into this imbalance right here, and then popped up, broke this structure right here, and went up. Start creating highs and lows, right? So this is what this would be according to Elliott waves. This is what this would be. This would be a wave 1. This would be a wave 2. This would be a wave 3. This would be a wave 4. And this would be a wave 5. All right. Wave 3, 4, and 5 always form the divergence. Wave 2 does not break below the starting point of wave 1. So that's what this would be. Okay. And then what we'll look for is an ABC correction after a 5-wave move. So that's what you have right here. Is what this being wave A, this being wave B, or you can look at it this way: this being wave A, this being wave B. Nah, I probably do it the other way. This being wave A, this being wave B, and this being wave C. Okay. So now this could be a 1, 2, 3, 4, 5 wave 1. These 5 waves can make up a big gigantic wave 1, and this ABC correction can make up a what? A wave 2. And then this could be a 1, 2, 3, 4, 5 wave move making up a wave 3. That's the thing about Elliott waves. You got waves inside of waves. So you got to realize what wave you're in based off the pivot that was made in the market. You can see how this is literally slanting upward right here from wave 3 to wave 5 like this. From wave 3 to wave 5, it's slanting upward like this, and then it's slanting lower on the RSI. That's how you know it's a divergence. And this point right here, where this wave 4 is at, this is that change of character area. Okay, and then when price changed character, price did not come back to the supply zone to cause a change of character, and boom, continue to do what? Redistribute, go down again. So you knew that this sell right here on this ABC correction was a reversal, and you know that this is going back bullish at some point in time off this divergence right here and change of character in between here. So then you go down to the 4-hour, you'll be able to see another divergence right here. How it went from bearish, internally substructured, to what? Bullish, right? So you see this pivot, price diverged, slanted upward right here, right? Midpoint, change of character, right? So then, let's see, let me show you. Really slant lower like this, right? Make this blue since we're on the 4-hour. Slant it upward. Change of character right here, or you can look at that one. Change of character. All right. So then now that it changed character, price is going to eventually come down and mitigate one of these imbalances, whether it's this one that tapped into the demand zone and broke this internal substructure, because this one's left open, whether it's this one right here, right? So price decided to use this imbalance right here. Okay, use this imbalance and decided to do what? Use the internal reaccumulation right here, and then decided to do what? Push up, break this structure, go bullish again. All right. So obviously, we're looking for this whole move right here to break this structure and create a new high. All right. So we go back to the, let's see, what markets on weekly, daily. No, markets on daily. So let's see. So we're going to remove this. I was just showing you how you can use Elliott waves to use it as a guide to keep yourself uh, consistent with the market. All right. So what we're going to do is this. We're going to mark up our highs and lows on this. This is a low. Daily. So I'm going to make this red. And we know that this is a high, distribution high. Okay, we know that this is what diverged right here. This is a low. And we know that eventually, we know that it's going to do what? Come up here, break structure, and create a new high. All right. You know that, oops. You know that eventually it's going to come up here, break structure, and create a new high. All right, mark that red since it's daily. Break structure above. All right, cool. So weekly, you know, this is a weekly fair value gap, so we're gonna mark this as like weekly alert. Make mention that price tapped into a weekly fair value gap and then pushed up. All right, so now that we're in tune with the market, let's change the character below daily. I'm marking up. I'm mapping my way to the millions. I'm mapping my way to the millions. Gotta create your map. Have to create your map. So on daily, we know that this will be a high and this will be a low internally. You know what? I'm gonna mark this on the 4 hour so I know that it's internal structure. Mm-hmm. Any questions, problems, or concerns? Yes, yes, it does, Tony. Wave 3, 4, and 5 always show divergence. The only thing about it is you don't understand. The only thing about it, we don't understand if that wave 3, 4, and 5 is that a if that is that a is that 1, 2, 3, 4, 5? Is that a wave A? Is that a wave C? Is that a wave 1? Is that a wave 3 or a wave 5? Because here's the deal: when it comes to Elliott waves, right? When it comes to Elliott waves, let me come over here to this empty space. If I draw a wave 1, 2, 3, 4, 5, right? Now, the divergence, any divergence, is always comprised of waves 3, 4, and 5. Okay? Any divergence is comprised, the divergence is made up of waves 3, 4, and 5 always. The thing about it is, you don't know if it's a 1, 2, 3, 4, 5 C wave. You don't know if it's a 1, 2, 3, 4, 5 wave 1, a 1, 2, 3, 4, 5 wave 3, a 1, 2, 3, 4, 5 wave 5, and sometimes there could be a 5 wave move in wave A. So here's what I'm talking about. What makes up, how many waves make up from this low to this high to complete this wave 1? Internally, it's a 5 wave move. So a 5 wave move internally makes up this wave 1. So right here, you have 1, 2, 3, 4. Hold up. Let me draw this better. 1, 2, 3, 4, 5. All right. I'm attempting to draw it as best as I possibly can. All right. So I'm gonna mark this a different color. I'm gonna mark this blue. All right. Now here's the deal. This is internally, this is a 5 wave move that makes up the orange wave 1. Does that make sense? That's a 5-wave move that makes up the orange wave 1. You got to understand what creates that wave 1? What creates the orange wave 1? Internally, it's 5 waves, 5 small substructure waves that make up that orange wave 1. Does that make sense? Let me know if that makes sense. It's 5 waves, 5 smaller waves that make up that orange wave 1. All right. So then you have this orange wave 2. What makes up the orange wave 2? A smaller ABC. So you have A, B, C correction that makes up that wave 2. Okay. And then what makes up from here, from this, the ending of the wave 2 to the ending of the wave 3, right? What makes up those waves? After 3-wave correction, you have a what? Another 5-wave move. So then you're going to have another what? 1, 2, 3, 4, 5-wave move. Okay, that makes up the orange wave 3. Then you're going to have what? A smaller ABC that makes up what? Wave 4. And then you're going to have a what? Another 5 waves that make up what? 1, 2, 3, 4. The orange wave 5. Does that make sense? Yes. So here's the deal. What makes up wave 1? There's something internally inside that makes up the orange wave 1. He said wave 3 is a 5-wave move on a lower time frame. Yes. So here's the deal. So wave 1, wave 3, and wave 5 all have 5 waves internally that make it up, that creates that wave. What constructs that wave are on a lower time frame. If on a, say for an instance, on a higher time frame, we're looking at this as a wave 1. Now you need to look at on a lower time frame to see what waves made up that wave 1. It's a smaller 5-wave move that made up this big gigantic wave 1. Then to create a wave 2 is going to be what? An ABC correction. Then to create a wave 3 is going to be a what? Another 1, 2, 3, 4, 5-wave move that created a wave 3. Then there's going to be a what? An ABC correction that makes up a what? Wave 4. Then there's going to be another what? 1, 2, 3, 4, 5-wave move that makes up a wave 5. Does that make sense? So now here's the deal. After every 5-wave move, there's a 3-wave correction, ABC. Then there's another 5-wave move. Then there's a 3-wave correction, ABC. Then there's another 5-wave move. There's another 3-wave move, ABC. Let's see. You got wave 1, 3, and 5 have 5-wave moves on a lower time frame, and waves 2 and 4 have 8. Absolutely, Tony. Absolutely. That is correct. That is absolutely correct. That is absolutely correct. Think about it internally. Think about it mentally. That's absolutely correct. All right. So, cool. So now look. Guess what though? We have our 5-wave move in the orange, right? We have our 1, 2, 3, 4, 5 in the orange wave, right? So guess what? We need to create a what? ABC correction. So guess what? For the orange wave, I'm gonna put it back in orange. Say this is a A, B, C right here. And it didn't break below this wave 4, okay? So that's why I'm putting the C right here. Just mapping up an example. Okay, now here's the deal. I'm gonna mark this orange. This is the ABC orange wave, okay? Because remember, The orange wave has a 1, 2, 3, 4, 5 wave move. And what happens after a 5 wave move? ABC correction, right? So this is its ABC correction. Okay. Now here's the deal. Here's the trick. Here's the trick. So the way you figure out what wave you're in is how the waves react. That's how you figure it out. So there are rules and violations to Elliott waves. If this wave breaks below this certain wave, it can't be this. If this wave does this certain thing, it can't be this. If this wave does this, then it has to be this. There are rules and regulations to trading Elliott waves. That's how you figure it out. So you have to let the wave print, okay, cool. This did this, so this has to be this. This did that, so it has to be that. So you're using the Elliott waves as a guide, as a GPS. I don't pull out the fib. I know the fib levels by heart, but I'm not necessarily waiting for a fib, waiting for price to hit a certain fib level to get in. That's how you like handicap yourself and make yourself miss out on the trade, because you're sitting here waiting for it to hit a certain fib level and you're predicated on that fib level, right? And if it doesn't hit that fib level, you're probably missing out on a dope trade, or your analysis was probably incorrect. That makes sense? So what I'm saying is you have rules and regulations when it comes to trading Elliott waves. That's how you figure it out. So here's the deal. This is just an example right here. So check this out. So in wave A, right here, wave A can have either 5 waves or 3 waves. Okay, that's what you need to know. Wave A can have 5 waves or 3 waves. It's going to either have 5 or 3. Now here's the deal. Here's the deal. If after a 5-wave move we go into a corrective phase, because that's what the ABC is called, a corrective phase. The 1, 2, 3, 4, 5 is called the motive phase. Okay, and the ABC is called a corrective phase. So we're going to corrective phase. Say after this 1, 2, 3, 4, 5-wave move, wave 5, right? Now we need an A wave. So say if this A wave was 5 waves. If this A wave is a 1, 2, 3, 4, 5, hold up, kind of drew that a bit wrong. Let me spread this out like this. Spread it out a bit. So say if this A wave is a 1, 2, 3, 4, 5-wave move. Okay. Say this orange A wave is a 1, 2, 3, 4, 5-wave move that constructed it on a lower time frame, right? Now here's the deal. In the corrective phase, there's only 2 patterns. Okay? In the corrective phase, there's only 2 patterns. There's a zigzag and there are flat patterns. Zigzags and flats. But the thing about it is, a zigzag starts off with 5 waves in the A wave, and a flat pattern starts off with 3 waves in the A wave. Does that make sense? Does that make sense? In the A wave, in the A wave, if you have 5 waves in the A wave, you're looking for a zigzag. If you have 3 waves in the A wave, you're looking for a flat pattern. Now, if the A wave has 3 waves, there are 3 different variations of a flat pattern. There are 3 different variations of a flat pattern. So the easiest thing to do is, if I see 5 waves in a wave A, right? I know off the bat I'm looking for a zigzag. So I'm gonna show you with the fibs and everything, the fib levels, but I don't use them, but I just gauge them with my eye. So with the fib levels, right here, you use the fib retracement tool, not the fib extended. The trend-based fib extension, that's for your take profit. The fib retracement is for your entry. Okay, fib retracement is for entry. Trend-based fib extension is for your exit. Okay, so you got to learn your tools. So fib retracement, You pull it from what? This would be a divergence to here, right? And so what you'll be looking to do is what? You'll be looking to do this. All right, you'll be looking to do this. If this is a 5-wave, 1, 2, 3, 4, 5, 5-wave move in the A wave, then you know you're looking for a zigzag. A zigzag does this. A zigzag hits in between 61.8 and 78.6. 61.8 minimum, no more than 78.6 in order for it to be a B wave. In order for this to be a what? A bearish divergence, change of character, you get in for your sell, and then it's going to sell what? Do a 1, 2, 3, 4, 5 wave move that breaks below the A wave. Okay, so then this right here will be what? If this is a 5-wave A move, then what would this B wave be? If this is a 5-wave A move, what would this B wave be? What would the B wave be? If that's a 5-wave A move, what would the B wave be? The retracement into the 61.8, 78.6 area. What would that be? First of all, no. What waves? What waves? I'm not talking about the pattern, Tony. What waves? If this is a 5-wave A move, then what waves will make up wave B? What waves will make up wave B? The orange wave B. What waves on a smaller time frame will make up the orange wave B? ABC. There you go, Tony. ABC. ABC. So here's the deal. You have this. A, B, C, B wave. We're gonna mark this blue. Okay. You're on a smaller time frame from here to here, you're gonna have a smaller A, B, C, B wave. You're gonna have a smaller ABC that makes up this B wave. Because remember, wave B is a correction. So it's got to have a corrective wave. Your corrective waves are ABC. Your corrective waves are ABC all the time. So here's the deal. Wave 1, impulsive. Wave 2 is a correction wave. Wave 3 is impulsive. Wave 4 is a correction wave. Wave 5 is impulsive. Wave A is impulsive. Wave B is a corrective wave. Wave C is impulsive. Does that make sense? Y'all got that? But the only difference is that wave A can have a ABC in it. Wave A can have an ABC, can be made up of an ABC, or it can be made up of wave 1, 2, 3, 4, and 5. All right. So here's the deal. In this particular example, this will be a zigzag. So a zigzag is this. Okay, cool. The price came back and retraced at the 61.8 minimum, 78.8, 78.6 maximum. Cool. Get in for my sale. And then I know that if this is going to be a zigzag, I know it has to break past the ending of this A wave and create a what? A smaller what? 1, 2, 3, 4, 5-wave move to the downside. So this would be a what? 1, 2, 3, 4, 5 C wave. So the only wave that I have that could be comprised of a 1, 2, 3, 4, 5 or ABC is wave A. Everything else is what it is. You'll never see an ABC in wave 1. You'll never see a 1, 2, 3, 4, 5 in wave 2. The only wave that's going to have a 1, 2, 3, 4, 5 or ABC is wave A. Everything else is as it is. Wave C will always have 5 waves. Okay? Wave B is going to always be ABC. Wave 4 is always going to be ABC. Wave 3 is always going to be a 1, 2, 3, 4, 5. Wave 5 is always going to be a 1, 2, 3, 4, 5. So here's the deal. If we had a 1, 2, 3, 4, 5 wave move, right? And then after the 5-wave move, wave 5, price decided to do this. Price decided to do this. Hey, you want to know what? I want to form three waves. I want to form three waves in wave A. Okay, now what we'll be looking for? What pattern? What pattern will we be looking for if wave A is made up of an ABC? What corrective pattern would we be looking for if wave A is made up of an ABC? If wave A has three waves in it, what corrective pattern would we be looking for? Absolutely, a flat pattern. There's only going to be two patterns. It's either the correction, the ABC correction, the entire ABC correction is either going to be a zigzag or a flat pattern. So now we know that a zigzag has, we know that a zigzag in wave A, it has 5 waves in it, but in a flat pattern, wave A has three waves in it. Okay, so here's the deal. I'm gonna show you the 3 different variations. Okay, wave, you got an ABC, A wave, minimum, minimum right here. This is what is called a regular flat pattern. Price will create an ABC A wave, come back right here and create a what? A, B, C, B wave, and then create a what? 1, 2, 3, 4, 5 wave move to the downside for wave C. And that wave C is going, that wave C will break below wave A to create the 5 waves. Okay? That wave C will break below this wave A to create the 5 waves. All right? This is what you call a regular flat pattern. It hits a minimum of 78.6, a maximum of 90%. Okay? Of wave A. This is wave A. From here to here is wave A. So the market will retrace to 78.6 minimum, maximum 90% of wave A in order to sell down. All right. That's called a regular flat pattern. Okay. Now, let's see. It's the expanded flat pattern. Let's see. Still same thing. 3, 3, 5. 3 waves in wave A, 3 waves in wave B, and 5 waves in wave C. It's just different. It's a different variation. So boom. The other 2 versions. Minimum 1.236. Okay. Minimum 1.236. Maximum 1.618. On the field, this right here is still what? ABC. This is still ABC B wave. And guess what? Expanded is called an expanded flat pattern because wave B is expanded and wave C is expanded. Okay. Still have the what? 1, 2, 3, 4, 5 wave move to the downside. Make sense? That's the second version. Let me see what the third version is called. I forgot. I forgot. I know it's regular, expanding, and a running. That's what it's called, a running flat. All right, cool. The last one's called a running flat pattern, okay? What I have on the screen right now is an expanding. Expanding means the wave B expands, the wave C expands. The last one is a running flat pattern. Still same thing. Wave A has 3 waves, wave B has 3 waves, wave C has 5 waves. But here's the difference. In a running flat pattern, wave B is expanded, 1.236 minimum, maximum 1.618. But wave C has a 1, 2, 3, 4, 5 that does not break below wave A. Does that make sense? So this 1, 2, 3, 4, 5 will be a little bit smaller. It'll be 1, 2, 3, 1, 2, 3, 4, 5 wave move that does not break below wave A. That makes sense? That's the only handicap with the flat pattern. When you know that you have three waves in wave A, okay, first of all, when you first come, if you once you see a 1, 2, 3, 4, 5 wave 5, and then that wave A comes out and you see three waves in wave A, your first instinct is, okay, cool, I'm expecting a regular flat pattern because the market is going to retrace to what? The 78.6, 100% fib first. You're going to see if that bearish divergence is going to appear there first. If it doesn't, it'll expand higher to the 1.236 or the 1.618, okay, to sell. But then if it does expand to the 1.236 and 1.618 area, then you have to be super cognizant and say, I don't know if it's going to be an expanded flat pattern or I don't know if it's going to be a running flat pattern. Because remember, the difference between the expanded and the running flat pattern is wave C. Wave C on the expanded breaks below the A wave. The 1, 2, 3, 4, 5 breaks below the A wave. But on a running flat, the 1, 2, 3, 4, 5 and wave C, it respects wave A as a demand zone. So that's the only difference. Y'all with me on that? Let me know if y'all understand. Y'all get it? Now, for my people that's joining me on YouTube or IG, I do have a Telegram chat channel that's going to be listed in the description below. Okay? If you simply want to join, all you got to do is take your Wi-Fi enabled device and download Telegram. Come back to my IG bio. My IG bio is going to be in the description below as well, which is okdjrofficial. Okay? I have 75 members in a Telegram group. I also provide signals to the point. But the thing about it is, I want you to become your own signal taker. Okay, not to leech off of me, but we have the signals. We have the signals thrown out and have descriptions as to why they're thrown out. You know, for people, everybody's always learning. Even me, I'm always learning. I'm always being a student of the game. So I appreciate each and every one of you for taking time out of your busy schedule in order to listen to what I have to say. It is always greatly appreciated, and I will never ever take it for granted. Have a safe, blessed, and productive rest of your soulful Sunday. Know that I love you, and as I always like to say, God created us on purpose to fulfill a purpose, but more importantly, God has blessed us with our name on it. Always remember that to be addicted to information, but never allergic to execution. Also remember that it's nice to be important, but it's more important to be nice because every single individual human being in this world is going through some type of trials and tribulations, challenges, obstacles, and battles. And many of us are going through multiple trials and tribulations, challenges, obstacles, and battles simultaneously. So be super cognizant and aware and intentional on what you need to say, on what needs to be said, and what you want to say. But check your delivery method and check the recipient on the end of that message because not every person receives messages the same way. Your intent is to be completely transparent without being rude and without being disrespectful and without causing harm to the recipient. Okay? But while we're going through these trials and tribulations, challenges, obstacles, and battles, we must come to the realization that the teacher remains silent during the test. If you don't understand what I meant behind that, you need to increase and upgrade your level of personal self-development. That's just being completely transparent without causing any harm or being disrespectful. All right? Another thing, people only rock with you for two reasons. Either you've been official, either you are beneficial. Just know the difference between the two. All right? Never stop learning, never stop studying, never stop teaching, never stop grinding, and most importantly, and certainly not least, never stop praying. I will see all of you next week on YouTube with another weekly trade watch list. All right, y'all have a safe, blessed, productive week. Y'all take care. We're about to go live on Zoom, so if you want to be on live on Zoom with us, I suggest you hit the link in the bio, in my IG bio, or I suggest you go down to the description of this video and you simply add yourself to the Telegram chat. All right, y'all take care.